Bitcoin did not start when Satoshi Nakamoto released the Bitcoin white paper. In fact, it started over a decade before, which we can date back to when Adam Back invented Hashcash, which introduced the concept of proof of work. Kind of like the original Bitcoin without a finite supply of coins, and it was mostly used for email protocols. It took over a decade to get to a true cryptocurrency in 2008, when Bitcoin was introduced. But even then, 2009, 2010, the early days, what I call adolescence, Bitcoin was an inherently political act. It was founded with its Genesis block having the Times of London headline, Chancellor on brink of second bailout for banks. This was an act that went against banks and went against government. And at first, Bitcoin wasn't interesting, and it didn't have value. Now, what gave Bitcoin value? We can make a lot of different arguments. We can say it was a great technology, or that it was more efficient than any money we've seen before. That really didn't lead to adoption. This is what led to adoption. Black markets. It was Ross Ulbricht who created a kind of online drug bazaar, global, accessible, that anyone could use, that got people first using this technology. It's not a bad thing, but it took some time. Then you get to the Wild West years. Charlie Shrem, who's here, started the first major Bitcoin company called BitInstant. He got funding. Eric, who I don't believe is here, started Satoshi Dice, another semi-legal or illegal platform that allowed you to gamble online. This gave rise to the popularity of Bitcoin. You know, the ability to buy Bitcoin, maybe a handful of people, several handfuls of people, saw it as an incredible investment. A lot of people were just trying to buy drugs or gamble online. Not a bad thing. But it took time to move forward with the adoption of this technology. September 2013, very important month, I discovered Bitcoin. And this is when I kind of got catapulted into this industry. And Bitcoin was all that people were talking about. We weren't talking about anything else. Then, a couple months later, before I got to meet Charlie, who's now one of my good friends, he went to jail. I remember walking home from school and seeing that he was on Bloomberg, being led away in handcuffs. And that was not the most remarkable image, but it actually indicated a shift in thinking about this technology. But first, we had to get to Mt. Gox. Mt. Gox was the end of the Wild West years of Bitcoin. This was the largest exchange in the world, doing over 85% of volume. And in a matter of days, it was realized that almost $500 million worth of Bitcoin had vanished. And from there, and a lot of people that were interested in this technology began to recoil, especially the banks. There were many initiatives to move this technology forward, but for the most part, the big institutions were scared. This actually presented an opportunity for venture capitalists, however. So you started to see a lot of VC investment beginning around mid to late 2014. You had executives such as Blythe Masters, who was a top dog at JP Morgan, enter the industry. Less scams and con artists are present, especially at the conferences. I remember back in the day, you would go to a conference, everyone was just trying to pump you their shit coin. Now I have that happen once or twice a conference, which is a massive improvement. Let's move to today, generally speaking. This technology has evolved at a pretty extraordinary rate. It may not be like the adoption you see with Facebook or Google. That's because it's kind of a protocol improvement to our lives, not a front-end consumer-facing improvement, one that has these massive network effects immediately. But development is happening. You've got investment from every major financial institution in the past couple of years. You have the launch of Ethereum, which is significant because it adds a new feature set that doesn't currently exist in Bitcoin. Some will argue that that can exist in the future, but truly robust smart contracts and decentralized applications are not possible to really build on Bitcoin. I can say that because I tried. founded a company called Augur, and that company, we tried building it on Bitcoin, and you can see our white paper for doing it. And we thought it out really hard, and then we tried doing it, and it was really, 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 really tough. Pretty much impossible. And so Ethereum introduced a very novel concept, the ability to build these contracts that exist outside the realm of our current paradigm for contracts. And these can be used for applications or actual legal agreements. Thus, we start to see a massive spike in interest in this underlying tech, the blockchain. Why is this? Because as many people began to see with Bitcoin, when just looking at the token aspect, was that this was a novel invention. This was pretty much game-changing in the world of finance. Whether it picked up or not was another matter. But the reason why it was novel was, and I think most Bitcoin maximalists, as they're called, would agree with this, is that Bitcoin allowed you, just like the internet allows you to share information with anyone in the world, Bitcoin and its underlying innovation, the blockchain, allow you to transfer value to anybody, anywhere in the world with an internet connection. That is revolutionary. And I say that because that can affect every single person with a phone today. I mean, you can send Bitcoin to anybody with a dumb phone. That is novel, and this is where you start to see the peak of inflated expectations on the Gardner hype cycle. Right up at the top, right before we begin to realize that all these crazy ideas people have for the blockchain actually don't work. And that's what kind of the people that kind of bash blockchain excitement over are seeing is a lot of these ideas won't work. But there are ideas that will. So today, we've gotten to the point where you have a huge amount of hype over blockchain technology. And as a result, you have a rekindling in the interest in Bitcoin, the token. And virtually every major company in the world has a blockchain task force. I've met with many of them. They don't really know how this technology may affect them, but they know there are use cases that they need to explore. Companies in the 21st century are very aware of this kind of token term disruption. And so they greatly want to avoid it if they can. I want to go back to, I say I give this talk every year, this is my third. I want to go back to my major prediction from 2016. Don't worry, this year I have a lot more. My major prediction last year was that entrenched incumbents will directly and indirectly fuel the next stage of development in this industry. And people kind of scorned me and said, no, it's going to be the startups, we're going to do it. And I was like, you guys are going to do your thing, and you may have these partnerships with these incumbents, but if we want to move this technology forward, and if this technology is going to move forward, it needs to be embraced from above. This is not the sort of underlying technology that can be implemented without some acknowledgement from major players. And sure enough, we've seen massive partnerships. Visa partnered with Chain to create a business-to-business international payments platform. You have Hyperledger, which is one of the largest open source working groups in history, getting all sorts of institutions together to figure out how to take this blockchain technology and make it work for enterprise. And then just a few days ago, the I'm not even going to try to pronounce this, the Depository Trust Clearing Committee, I don't know, pretty much they do a lot of clearing of major settlements, has partnered with many startups and IBM to use put all credit default swaps on the blockchain. This is massive. And this moves me to my predictions. We will see in the next year blockchain technology becoming real. We are going to see proof of concepts that have existed within large corporations and enterprises, even in some governments, actually come to fruition. This is going to be a catalyst for pushing Bitcoin upwards. Because when the protocol shows value, and now not all these proof of concepts exist on the Bitcoin protocol, of course, but they exist on other blockchains. When the protocol becomes validated, the underlying value of the token attached to the protocol goes up. This is how you give security to a blockchain, by having a valuable token that people are incentivized to validate. It's fairly logical. And this is something that we're going to see in the next year. We are going to see the price push past $1,000. We saw it happen around New Year's. And we'll see it happen Further, probably, I mean, I'd like to say $3,000, but we're going to see significant movement over the next year as this technology continues to be validated in the real world by large enterprises that people trust. It's going to be something that hedge funds look at, that people are going to look at for IRAs, for retirement. There's a lot of potential when people see this in the news all the time and they see it really working. Importantly, you guys may not care about this, but I just published, or I'm about to publish a magazine called Distributed, a 100-page magazine all about blockchain technology. And we're writing all these articles about every possible, every fathomable application of blockchain technology that people have really been able to validate so far. And yet we don't know what to call anything. Is it a private blockchain? Is it a permission blockchain? Is it a hybrid blockchain? Or is it a consortium blockchain? Like, is it even a blockchain? We actually had to make a decision tree at the very end of the magazine where you kind of just ask questions saying, do you need a database? And if the question is no, well, you don't need a blockchain. But a lot of people don't realize that yet. And so I think over the next year, there's going to be a much greater extent of understanding to how this technology actually works. Lastly, governments have been looking at this. We've seen it, the governments of Georgia, across Latin America. Really, actually, Sweden the other day announced they're going to do their land title registry on the blockchain, or at least a proof of concept. We're actually going to see the largest institutions in the world, governments, start to deploy this technology. And that, I believe, is probably the ultimate validator in showing that even the largest, most powerful institutions in the world see the potential to be disintermediated. Now, in the short to medium term future, in order for this technology to really flourish, especially at the kind of level that Satoshi Nakamoto and early adopters of this technology envisioned, you need consumer applications that are truly decentralized. Augur, which I helped found, is a prediction market platform, pretty much like a stock market. But instead of buying and selling shares in what you believe the future price of a company will be, you buy and sell shares in what you believe the future outcome of an event will be. Whether it's a political election, a sports match, doesn't matter. Open Bazaar is a decentralized marketplace. Allows you to buy anything from anyone without any sort of third party arbitrating that transaction. This was part of the trail blazed by Silk Road, and while I don't think the creators would endorse that statement, it is the next step forward in having a truly global and free marketplace. Now, in the long term, we're going to see a lot of interesting developments. Private blockchains, I don't know if any of you guys are building them or believe in them, but they're probably going to die. If you have a database that you need to have used only within your institution, you probably don't need a blockchain. Blockchains have to do with trust, and if there is trust, as there should be within any single institution, then you don't need a blockchain. So those are going to die. Consortium blockchains will probably still survive, and enterprise blockchains will still survive. I imagine if we build this technology correctly, we will actually see those consortium blockchains being attached to public blockchains, such as Ethereum or Bitcoin, whatever makes that work. Polkadot, introduced by Gav Wood, the technical white paper creator of Ethereum, just introduced this blockchain. And what it allows is for you to have both a public blockchain, which is attached to the Ethereum network, and then also these consortium blockchains, as I spoke about. So this is very tenable. It may take some time to get there. I see these consortium and private blockchains very much being like the early intranets, where large corporations were kind of scared of the internet, and so they wanted to throw in some training wheels first. That's kind of how I see this technology. Then there's going to be widespread consolidation. You don't need a Bitcoin exchange for every single country in the world. In fact, you don't really want one. If you are a Bitcoin user and you do not want to hold your own Bitcoins or cryptocurrency, you probably want to be able to use whatever service you use to buy and sell and hold your Bitcoins, cryptocurrency, wherever you are. So I think we're going to see consolidation. We'll see it among payment processors, see among API providers. If you look at the technology landscape of today, the 90s were littered with internet companies, and many of them flourished early on. But today, we have some Goliaths. I mean, who really does their online shopping outside of Amazon? I don't know, not me. I pretty much get everything there. And that's kind of how I see this technology evolving in the long term. But there's going to be plenty of time in the short term for many of these companies to flourish and figure out kind of who the real market leaders are. There are going to be big sales. Some of these smaller guys will be bought by banks or large institutions. That's a good thing. I'm a venture capitalist. I like that. Then, what we're going to see, as I explained before, is that assuming these protocols are employed, such as Ethereum and Bitcoin's networks, they're inherently undervalued now. Because they have to secure such a large amount of value in the future, their inherent value has to go up. So, I have very long bets on these sorts of tokens. Don't day trade. Then, there's decentralization. When I entered this industry 3 years ago, people were shouting, decentralize all the things. And I was like, what really needs to be decentralized? Money was good. The governance is fine. I think mesh networks are awesome. But for the most part, the use cases people were talking about, like a decentralized Twitter, it's like, all right, Twitter already sucks. It's not going to be better if you decentralize it. Social networks might work, and I think things like social networks such as Reddit or Facebook, if we're going to truly have decentralized versions of those, it's going to be part of this broader evolution where these protocols evolve in such a way that they're truly accessible and usable. And furthermore, I think these decentralized applications are going to need tokens. This goes against what I've said in the past, but I've really kind of had my mentality change. Because if you want there to be an incentive for these decentralized applications to really work, there has to be underlying value incentivizing that. Union Square Ventures came up with this chart that I really loved. This is the internet today. You've got the protocol layer, you have HTTP, you have HTML, all those things, all those multi-letter kind of configurations that make the internet work. Not very valuable. People that invented them are not very rich. Well, some of them are. But it wasn't from creating the protocol. I don't know if Justin Newton's here from Netkey, but he was an early architect of the internet. And nobody made a lot of money building that. It was the applications that were built on top. The pets.com or Amazon. Those are what created value. In the 21st century, in the era of the blockchain, the paradigm has shifted. Hopefully what we've kind of discussed before will help you reach the same conclusion that I have, but that it's actually the protocol in this new paradigm that is valuable, because the protocol is what gives the applications value. I mean, just think of the underlying infrastructure. The web didn't work. We don't really be using it. And this has created an incentivization layer in blockchain technology that enables applications to work totally globally, but maybe not actually be the main sources of value in the network. And that's okay. We're just kind of shifting the paradigms, but those applications can still exist because as long as you create a token that underlies your application, you actually can capture a massive amount of value. And you have less misalignment of incentives as well, because the people creating the applications are also managing the protocols. So they have a very game theoretical incentive to make those applications and the protocols work really well. Whereas, as we've seen kind of with the free internet wars that have occurred, what happened with a lot of large internet providers in the United States was that the incentives between the protocol and the applications were misaligned. So I think this is actually a better paradigm, but of course only time is going to tell. Now lastly, the biggest battle here has been won. Blockchain technology has been acknowledged and accepted as something that works. I mean, the DTCC doing all of their credit default swaps, I think like $11 trillion of value onto the blockchain, that's validation. We know that this technology is here to stay. But where it goes and how long it will take for it to apply to each of our lives, we've got a few years, I think. Rome wasn't built in a day, and neither will any really complicated back-end technology, such as blockchains and Bitcoin and cryptocurrency. Now, if you're willing to adapt today and not wait for it to become a part of your life, there's a massive amount of opportunity. You guys are all here, so that's the first step. Some of you are building fabulous companies. But acknowledging that this paradigm takes time to be realized is incredibly important for actually achieving the value that we spoke about before. Now, this is something that it took living in Silicon Valley for me to believe, but is 100% true. The future is open source. Open source enables technology to be more secure, more robust, and allows people to collaborate more. If you look in the field of artificial intelligence, so much of what's being created in that space is open source, and it's because it's for the greater good of everyone, even for the corporations competing against each other. That's going to be true in the world of blockchains. It may not be acknowledged yet, but as we move towards open source, we are going to live in a more robust, internet-connected world. And then lastly, as I just went over, and probably most importantly, if you guys are here to make money, I don't know if you all are, I'm not much of a capitalist, despite being a VC, the tokens are going to be what gives a massive amount of value in the next stage of the internet, the blockchain stage. Thank you. No time for questions. I'll take 2 questions if anybody wants one. One. The only truly secure and robust blockchain is a publicly verifiable and secured one that's secured by a token. And until governments are okay creating globally validated cryptocurrencies by random miners in China, that's really not going to happen. So yeah, I don't see governments were a threat when I entered this industry. When the market capitalization was much lower, there was a real threat, and when there was a lot less miners, the hash rate, it's through the roof now. The amount of money it would take to kind of destroy Bitcoin or Ethereum would be really remarkable. But I think governments are seeing this more as compatible technology with their kind of current state of existence and trying to create a real competition. One more.
What's your estimate of Bitcoins that are lost in the system?
I think it's much higher. He asked, how many Bitcoins have been lost in the system? Because if you lose your private key to a Bitcoin and you only have one copy, that's gone. I'd say, I'm much more bullish on this. I'd say up to maybe a quarter of all Bitcoins will never be accessed again. And that is something that people have not accounted for in the price. And I think as we begin to recognize that, if there's a huge drive for demand, this Bitcoin hits, let's say, $10,000, there's just not going to be that much to go around, and that could catalyze the price moving even further. My friend David DeBailey, the CEO of BTC Media, thinks we're going to hit $50,000 this year. I wouldn't be so bullish. However, I think $50,000 of Bitcoin in the next decade, totally tenable. Just saying. Thanks so much.